Assalamualaikum and hi everyone. I am Madam Yusna Liza. In today's session, we are going to learn how to do another past exam question, which is for the topic receivables. And our question today will be the final exam question, February 2021. And this is the one that was actually being tested in UITM Perak. So let's start. Okay, let me look at the first part of the question. This is the question. You have Akukaya, which is the reporting entity that involved in supplying mosaics and floor tile for construction companies in Perak. Most of the transactions are on credit basis. And the company closes its accounts each year on 31st of December. 2020, and the following is the summary of transaction which happened during that particular year, 31st of December 2020. If you read the first transaction, I believe you have done so. This one is on the credit sales, which gave rise to accounts receivable RG construction, and there was a trade discount there. The second one is the payment that were received from RG, full payment on 30th of January. The third one is the goods that were sold on credit again to another accounts receivable financial asset, Wawa Trading. And on 1st of May, there was another goods sold off to another company, Mahligai Indah. And for Mahligai Indah, you sell the goods and at the same time, you accepted 90-day 10% notes from Mahligai Indah. And then on 2nd of June, Aku Kaya faces financial problems. You got financial problems due to your heavy credit transaction. You allow a lot of credit transaction, perhaps by the customer, and in order to obtain immediate cash, what you do is you go and discount or discounted the notes that you receive from Mahligai Indah, and that was discounted with an interest of 250, and you discount that to RST Bank. And on 1st of September, there was a payment that you received from your accounts receivable Wawa. This is the Wawa Trading, and they paid only 60% of the amount due. And 31st of December, Wawa Trading was declared bankrupt. So remember, 40% was still not being paid, and board of directors decided to write off the remaining 40% as uncollectible, which means this is being written off as bad debts. So you have the amount receivable there, and that was on 31st of December to be 89,000 before including the transaction here. So that has to be incorporated later. The company estimate the credit loss or the expected credit loss, ECL, on trade receivable to be 8% and on all trade receivable. So there are no provision mix being used for this question, but it was just straight away 8% from the trade receivable available at the end of the current accounting period, and the balance of the impairment of trade receivable at the beginning of the year, which is the beginning balance in the allowance for impairment, was 16,500. So you are asked to state the, the three differences, which is not really so much related to the transaction, but just a general question, which is on the difference between trade discount and cash discount. This are the answer. You just need to state three. I'm going to provide 5 answers here. First one is that you can see here deduction from the quoted price versus the deduction in the amount owed by the customer for the cash discount. Second one is offer to the customer that is normally being given for the trade discount for bulk purchase. This one is an offer that was given to encourage quick payment or early payment within the discount period. And number 3 is about where you will have to invoice your customer for the net amount, and that was after deducting the trade discount. But when you offer cash discount, your customer are still being invoiced based on the gross amount before you deduct with the cash discount. So that was the two different. This was expressed in percentage of the quoted price, but this one is normally shown as a deduction from the sales account in the statement of profit or loss later. Then there is no journal entry for the trade discount, no accounting entries, but for the sales discount, normally you will debit discount on sales and credit to the accounts receivable. So you need to just answer any three of this. Next one, explain briefly any two objectives of providing the information on account receivable to the users of financial information. So why do companies, for example, provide information on receivable to the users of financial information? So there are only requirement there is for just two objectives. So you just need to choose any two of the following. First one is that it will give the users better decision about making decision to provide resources to the entity. Second one is to let them assess the efficiency and the effectiveness in managing receivable. The third one is also letting them to assess the business liquidity or the cash flow position of the company, the cash cycle in the business, so that the company will have enough cash to pay our business, for example, right? So that we have enough cash to pay our supplier, for example, as well. Next is to notice the warning sign. So you can also look at the warning sign if you have the aging analysis of the potential payment, for example, issues that may arise from the debtors that have maybe some payment problem, right? Next is you can also include this, where this can also ensure the business runs at peak. They will give the information about whether or not the company has financial issues that will normally slow down the business growth. So it is about efficiency that can give that information. Next one is to decide the journal entries for the transaction, not for all transaction, but just for the transaction on 2nd of June. So 2nd of June, and also to support your answer with the relevant workings to determine the proceed received from the bank. So if you can recall, the transaction on 2nd of June is about Aku Kaya that faces the financial problems due to the heavy credit transaction by the customer. And what Aku Kaya did was that Aku Kaya discounted the notes from Mahligai Indah to RST Bank. So earlier on 1st of May, they received the notes from Mahligai Indah, and that gives 90 days period for Mahligai Indah to make payment. However, just within less than a month, roughly more than a month, the notes were being discounted, not even waiting for the 90 days. So what is the journal entry for that? This is regarding discounting of notes receivable, and there was an discounted interest. So the first step that you need to do to find the proceed is to calculate what is the maturity value. Maturity value will be normally taking the principal or the face value plus the interest. So the interest here is the 10% interest given here, 10% based on the 90 days. And we assume in a year there was 360 days. So 16,000, the face value, times 10%, the interest rate, and the 90 over 360. This is the term of the note, 90. And 360 is the number of days in a year. And then we need to go and get the maturity value. That's the discounted interest. Discounted interest is given here in the question. So that was given 250. So you don't have to calculate. So that was 250. So if you take that, you get the proceeds 16,150. What is the journal entry? The journal entry on 2nd of June would be to debit bank 16,150 with the proceed, and the notes receivable will be credited at the face value 16,000, and the remaining will be credited to the interest revenue 150, which is 16,150 minus 16,000. Next is the last question, which is, as a knowledgeable accountant, you are asked assuming you are the accountant, construct a statement to show the amounts of allowance for impairment of trade receivable to be recognized in the statement of profit or loss, meaning that what is the amount of impairment loss, either that was an increase or decrease, to be shown in the statement of profit or loss, as well as what is the net realizable value of the receivable to be shown in the non-current assets section in the statement of financial position as at 31st of December 2020. Receivables. Okay, this is the information that you need to make use to get that, which is the last part, 31st of December, where when you need to go and calculate the net receivable, you need to take into consideration if there is any debtors or customers that become bankrupt. So Wawa was declared bankrupt and the amount was decided to be uncollectible. 40% of that, remember, 60% was paid. So the amount of trade receivable at the end of 31st of December was 89,000. So we just take from the question earlier, we just extract and put it here. The company estimate the expected credit loss to be 8%. So there is no provision mix being used here. It was just 8% on all trade receivable balance at the end of the current accounting period. And earlier on, we know the impairment of trade receivable balance, the allowance balance is at the beginning of the year for the current year was 16,500. So you are asked to determine that. So earlier on when we were talking about the impairment of receivable, there was a write-off of the bad debts, right? That was happening on 31st of December 20. So that one is where you go and debit allowance for impairment and credit the impairment, the account receivable. This is to write off that as bad debt. Bad debts written off. Okay, when you do that, you need to reflect that in the movement. So what you will see is that first go and show the balance at the beginning of the year for the allowance, which was given in the question 16,800. Then include the trade trade receivable that were being written off to 7,002, so that will reduce the allowance because you debit. Next one is to check if there is any bad debts recovered. In this question, none. If you have, take into consideration. And then the next stage is to look at what is the expected credit loss allowance at the end of the year, where the ECL allowance was given to be 3%. And earlier on, the balance in the receivable was 89 without taking into consideration the bad debts that were written off, which was the 7,200. Just make some correction there, please. 6,544. So if the 89,000 minus bad debts written off 7,200, you will get that multiplied by 3%, you get 6,544. So this will be the one that you will show here as the balance carried down. So your next task is to find out what is the amount to be recognized in the SOPL. To do that, first total up these the first three items here, if you have, meaning that the running balance here 9,006, right? If you take that 9,006, because 16.8 minus 7.2, compare this 9,006 with the one at the end of the year. So you will see that there was charge for the year, there was a decrease because 9,006 down to 6,544. So this was a decrease in loss allowance. There was a reduction in loss allowance of 2,756. The reduction in loss allowance has to be shown in the other income section of your SOPL. So that has to be shown in the statement of profit or loss for the end of the year. So in terms of journal entry, just to show you, this is not required. This is the journal entry for you to go and credit to the SOPL and debit to the allowance with the charge for the year. So this is what you calculate here if you want to do journal. But the answer is just this, where the reduction in the loss allowance is recognized in other income in the SOPL. How much is the reduction? The reduction was 2,756. So you would say the allowance there in the SOPL would be 2,756. Okay. And if you were to show the presentation would be like this. Yeah, put them as part of other income. Next is the information to be shown in the statement of financial position, which is the net realizable value. So to calculate the net realizable value, you can use the working that I show here, which is in the extract statement of the financial position, the one here. Take your account receivable, which is 89,000 minus 7,002, 81,800. 7,002 is the bad debts written off. Allowance for payment, impairment of receivable is the one that you calculate here, put it here. So you have a net realizable value of the account receivable to be 72,256. 72,256, which is the net realizable value. You don't have to show the statement unless you are asked to show the movement. But in our case here, if you look at the requirement, the question which is here, you are asked to show that statement on the allowance only, which is the statement of allowance, which is this part. This part, yes, only up till here. Up till here, yeah. But what I'm giving you here is the bonus answer in case you are asked to show later in the extract of SOPL. When you prepare your published account, make sure you include that correctly. And also when you are asked to prepare your published account later, you may also want to show the impact of the accounts receivable, right? Accounts receivable, which is shown under the current asset. That's it. I hope you have learned a lot from this session. You can also do the working the way I show here, yeah, without the extract of statement of financial position. This is just for some kind of bonus answer, right? With that, the answer is just what in the yellow box there, or the so-called orange box. With that, I thank you for watching, and I'll see you when I will see you, and I will see you again in next video. Until then, bye bye, and have a pleasant day ahead.